Gold and stocks surge as U.S. shutdown deal passes Senate. A bustling financial district in Beijing, China, on October 13, 2025, showcases the stock market's volatility. An electronic board displays stock index information, reflecting the global market's reaction to political events. Reuters, Maxim Shemetov, summary. Senate approves bill to end U.S. government shutdown. Gold, Nasdaq soar, yen plummets to 9-month low. Singapore, November 11th, Reuters. Asian markets witnessed a surge in stocks on Tuesday, while gold and the Nasdaq experienced their most significant gains in months, all attributed to the impending end of the U.S. government shutdown. Gold prices skyrocketed by nearly 3% overnight, surpassing the $4,100 mark in the Asian morning session. The Nasdaq IXIC rebounded with a 2.3% increase, recuperating from the losses incurred the previous week, due to market jitters surrounding AI firms' valuation and profitability. In South Korea, the Kospi KS11 recovered from its previous week's decline, advancing 1.3% in early trading. Japan's Nikkei N225 also rose by 0.4%. However, by mid-morning, markets in Hong Kong, onset SSC, and China SSEC were slightly lower. The SP 500 futures remained steady. The U.S. Senate's approval of a deal to restore federal funding and end the prolonged shutdown on Monday paves the way for the House to act. Speaker Mike Johnson aims to expedite the process, targeting a potential passage as early as Wednesday, followed by President Donald Trump's signature. Prediction markets, such as Polymarket, anticipate a near-complete reopening by the end of the week. Vasu Menon, an investment strategy director at OCBC in Singapore, expressed relief that the shutdown's conclusion is imminent. He predicts that the government's reopening will facilitate data publication, potentially clearing the path for interest rate cuts and bolstering gold prices. On Wall Street, the SP 500, SPX, closed with a 1.54% gain, its most substantial one-day percentage increase since mid-October. The Nasdaq, IXIC, achieved its most significant daily gain since May. Initially, safe haven assets like the Japanese yen and U.S. Treasuries retreated as risk-taking sentiments prevailed. The yen, under pressure, reached its weakest level since February, at 154.49. However, bonds recovered some ground as Federal Reserve speakers cast doubt on the December rate cut, which markets had tentatively anticipated. 10-year Treasury yields peaked at 4.147% on Monday, but settled at 4.11% by session's end. The bond market was closed on Tuesday for Veterans Day. Jack Chambers, a senior rates strategist at ANZ in Sydney, commented that the reopening is unlikely to trigger a sustained sell-off in rates, as markets had not initially responded negatively to the shutdown. Additional reporting by Gregor Stewart Hunter in Singapore, editing by Sri Navaratnam. Our Standards. The Thomson Reuters Trust Principles.